We share with our customers the desire for a better future, a more sustainable world in which businesses and individuals can thrive. I am proud to disclose to you today our new purpose, the basis for the new Alpha Bank and the North Star in the way we operate. At Alpha Bank, our role is to stand with our customers, recognize and trust their abilities and goals, and connect them to new opportunities and partnerships to help them realize their ambition. Alpha Bank's purpose is to enable progress in life and business for a better tomorrow. All our priorities going forward will be delivered from this purpose. Designing experiences, not just banking products for our customers, is based on a deep understanding of their real needs, and we can deliver them based on our trusted partnership with them. Being there in the most important moments of their lives with relevant products and offering them expert advice helps them to seamlessly integrate finance in their lives. This is the way we are enabling our customers to grow with us. With that in mind, let us move to our strategic plan and allow me to give you some perspective on how our priorities have evolved over time. The beginning of my tenure as CEO was marked by a period of heavy restructuring. The focus was on restoring the balance sheet and fixing the fundamentals of our operating model, deleveraging problematic assets, and exiting non-core businesses. Shrinking our balance sheet has drastically impacted our revenues. Hence, our attention shifted to top-line growth, which was supported by a favorable macro environment. Cost rationalization and the normalization of the cost of risk resulting from the first phase of our work allowed us to reap the benefits and contributed to increased recurring profitability. By the end of this year, we will have achieved our target of 10% return on tangible equity, and we will be looking forward for even higher financial performance and increased sustainable returns to our shareholders. The whole management team is focused on swiftly improving the structural profitability of our business units. To that effect, we will continue to invest in our people and our digital capabilities. Increased profitability and capital discipline is expected to lead to significant capital creation, which will be used to support expansion of our balance sheet and to distribute value to our shareholders, subject to regulatory approval. In terms of financial targets, we aim to deliver a return on tangible equity above 12% by 2025. Earnings will be on upward trajectory, with EPS growth of more than 20% on an annualized basis for the period 2022 to 2025. We plan to generate 2.3 billion of regulatory capital throughout this period, thanks to a faster than the market earnings growth and conversion of our DTA stock. All this will allow us to gradually resume dividend payments starting from 2023 profits, following a relevant dialogue with our regulators. Let's now talk about our profitability outlook. In 2022, we closed the year with a return on tangible equity of 7.6%. This year, we are targeting 10% on the back of a solid first quarter and ongoing tailwinds in the operating environment. For 2025, we expect a further increase of our return to tangible equity to more than 12% on a tangible equity of more than 6 billion as a function of higher profitability across all of our core business units and better capital allocation as we convert DTAs that are currently not part of our regulatory capital into profits. We will discuss business drivers in more depth later, while Lazaros, our CFO, will speak more about capital allocation and efficiency in his presentation. The improvement in profitability and over 20% annual growth in earnings will allow us to generate just under 2 billion of net profits in the period. Alongside the conversion of deferred tax asset, this will allow us to generate 2.3 billion of regulatory capital throughout the plan. Part of that, circa 900 million, will be deployed to fund growth during the period. However, the vast majority, about 1.4 billion, will still above the minimum levels of capital that the management considers as necessary to operate the bank. Our financial projections currently include some accruals for shareholder remuneration, with annual dividend distribution at circa 30 basis points per annum, having been put as a placeholder in our business plan subject to regulatory approval. Following the appropriate discussions with regulators and shareholders, we have every intention to increase the amount of capital to be returned to our shareholders. To achieve our ambition, we have identified 6 distinct strategic priorities that leverage our strengths and work on areas where we want to improve our performance. This plan will be enabled by our investments in people and digital. Let's start with retail, where we plan to more than double our profitability. Isidoros will share some detail later. We will fully digitize everyday banking needs, which should free up time of our people for them to allocate more time on commercial matters. This means upgrading the servicing for nearly 500,000 of affluent and emerging affluent clients, for instance, by extending wealth advisory services. In practical terms, focusing more on commercial activities means growing the unit sales per employee by circa 40%. In wealth, we aim at double-digit annual growth rates for asset balances and revenues, driving profitability. The key goal is to address a wider customer base, scaling our wealth engine and customizing our investment propositions to all segments, such as the introduction of light discretionary services for first-time investors. We are aiming to increase investment penetration in affluent segment by nearly 19 percentage points. George will articulate further in his section. For wholesale, our plan is straightforward: to leverage our leadership position to capture the potential of the Greek market while maintaining our robust profitability. Yannis will walk you through his strategy, which will allow us to continue supporting our customers with approximately 14 billion of cumulative disbursements. At the same time, we plan on growing our service business and reaching our product palette and launching targeted commercial campaigns. On our international business, which Sergio will describe more in detail later, the objective is to improve the return on deployed capital. We will focus on Romania, where the opportunity is greatest, and will play to our strengths and leverage the newly launched platforms to grow our top line. We aim to maintain the resilience of our balance sheet, acting mainly along two vectors. On lending, we continue to focus on growing our book profitably by being disciplined in pricing it in a risk-adjusted way. At the same time, we will take our NPE ratio down to circa 4%, mainly through organic levers, allowing us to increase coverage to approximately 60% without impacting our cost of risk. Secondly, we maintain strong levels of liquidity by expanding our diversified, granular, and sticky deposit base at circa 3% per year. Finally, allow me to say a few words on sustainability. We will leverage sustainability as a value creation lever. We have started a journey in 2019 to progressively integrate ESG in our business strategy and operating model. For 2023, we aim to become the first Greek bank to join Net Zero Banking Alliance, completing the full measurement of financed emissions and defining science-based targets for our operations and portfolio. We defined some preliminary targets that we aim to articulate further later this year. Firstly, we commit to supporting an environmentally sustained economy, allocating 3 billion over the business plan period to green lending, of which 1 billion for renewable energy investments. Secondly, we want to be leaders in supporting diversity and inclusion both internally and in the society. To this end, we commit to maintain our leading gender 40% representation in the board of directors and the management. Thirdly, we will continue to guarantee a robust and transparent corporate governance, maintaining the independence of our board of directors and incorporating ESG criteria in the remuneration and risk management framework. Our strategy is closely linked to the UN Sustainability Development, and we set goals which we are proud to support as long-time members of the United Nations Environment Programme Finance Initiative. The plan hinges on two critical enablers: people and digital. We have a clear strategy for each of them, and now I would like to pass the floor to another member of our executive team, Fragiski Melissa, Alpha Bank's Chief Human Resources Officer, to tell us a few words on our HS strategy.